Hey, what's up, everybody? Junior Diaz here, aka Junior the Trader. And OMG, what has it come down to? All right. So first of all, as you guys see in the description, exposing Pipology and exposing exotic wealth. I am done with this shit, bro. Like I'm done. All right. So I already, I'm a man. I'm a man, and I own up to my wrongs whenever I'm wrong. If not, I'm the type of person that's just gonna try to so that there's no bad blood. I'm just gonna try to apologize. If I feel like there's something that's kind of like in the way. All right. So, Jeremy, big shout out to you, bro. And I'm sorry that it has come down to this, man. It has come down to this. I got nothing but love for Pipology. And then also shout out to Exotic Wealth, man. Once again, it is what it is. I had tried to apologize on both ends. If I'm if I'm the one that's wrong, hey, I'm good with being the villain, and I'm done. Trying to make things right, even when I haven't done nothing wrong. Okay, so whatever it is from here on out, it's cool. Big shout out to Apology, much love, guys. And shout out to the Exotic Wealth, much love. Y'all motherfuckers need to hash that shit out. I tried to do my part. If it wasn't good, oh well. I told you guys I'm not gonna bug nobody, and it is what it is. At the end of the day, we do this for folks we're in this industry to because we have experience and we want others to grow from our skill set. So from all that negativity, I'm just about to expose my skill set and put traders on to strategies of mine that work. Okay, so with all the negativity and with everything, like I said, it's lived here, it's gone, new page, and kind of put that energy on these charts. And for this reason, I have called this the shut the fuck up method. Okay, the STFU. This is going to be the STFU method. Hopefully you guys enjoy, and let's get straight to it, guys. Much love and welcome to my new YouTube channel. Please hit that like, please hit the subscribe, and share it for me if you guys can. Let's get it. All right, guys. So what we're gonna go all right, guys, what we're gonna go ahead and do is I'm gonna go ahead and dive straight into it, and I'm gonna show you guys like for newbie traders. I'm gonna show you guys the strategy, okay, and then also for those who choose to watch the video a little bit longer, I'm gonna break down the technical point of it, like for the more intermediate to advanced student, or if you're trying to get price action and trying to better your skill with price action. All right, so with the STFU method, STFU, yeah. With the STFU method, we're gonna go ahead and add just two indicators, okay? And this is gonna be a trend following strategy. Okay, so you guys should be able to trade with the trend after you watch this video. All right. Okay, what we're gonna go ahead and do, we're gonna add a simple thing, a stochastic oscillator. It should be stock on your MT4, and this should be also on TradingView if you guys use TradingView. I just use simple MT4. Yeah, I just use MT4. All right, so the parameters is going to be a K period of 96, a slowing of 3, and a D period of 3. Low high, exponential, All right, and my colors, I just have regular, I have black and yellow. All right, for my levels, I have the 50. On the 50, I'm gonna put above, okay, buy above, above, buy above, sell below. All right, and then I'm gonna have an 80. I'm gonna have an 80, and I'm gonna put strong sell. Sorry, strong buy. 20, strong sell. All right, so remember 50, 80, 20. I'm just gonna go ahead and put okay. All right, our second indicator is just gonna be a simple moving average, right? Just a moving average exponential period 21, and I got mine on green. Okay, when it comes to trend trading, guys, the 21 moving average is golden. Okay, it's a real good trend following moving average. Okay, it's a real good tool, and I'm about to break this down. Okay, so the STFU method, here we go. All right, so what we want to do, guys, is first of all, I like looking at it on the 1 hour time frame. Okay, I like looking for these setups on the 1 hour time frame. So let's go for let's see what's the most visible setup so far. Okay, whenever we are looking for an uptrend, right, we want to see highs, higher highs and higher lows, higher highs, higher lows, right, like here. Okay, so basically what we want to see is we want to see price respecting the moving average of 21, right, in the upwards direction for a buy. Okay, another thing that's going to help us out is the stochastic. The stochastic 96 is one of my personal settings that I have for my MHF method. All right, but we're going to go ahead and use it for this. So whenever we're looking for a buy, guys, remember, we want to see or step number one, look for the stochastic. If it's above the 50, we want to look for buys, right? When it's above the 80, you know, it's a strong indication that the momentum is still to the upside. All right, whenever we're trading below the 50, we want to look for a sell. When it's below the 20, we have a stronger indication that momentum is to the downside. So I want to get some pretty clear setup for you guys. Crystal clear ones. Okay, so for a buy. All right, so for a buy right here, guys. Okay, so we see price going up, right? It breaks above the 21 moving average, right? It goes up. It takes out this previous high, right? Look at our look at our look at the stochastic. The stochastic here then passes a 50 moving average. I mean the 50 moving average, the 50 on the stochastic. On here, we would not take a trade because we don't know that we're on the uptrend just yet, right? Because at the time for this day, we're still below the 50, right? So on this next following day, after we know that there was a legit trend, a change of trend after the previous high was taken out, this is what we're gonna do. We're gonna wait for price to give us a bullish engulfing. What if you don't know what's a bullish engulfing? It's basically a I suggest you guys look it up on YouTube or Google. It's really easy, but just for the length of the video, I'm not going to explain it. but it's just a larger momentum candle that's larger, a larger body than the previous candle. Okay, like I said, an engulfing candle. You want to look for a bullish engulfing candle. All right, so by the time that you have this bullish engulfing candle, right, this is where I would enter the market. Okay, I would enter the market here, and this is going to be my take profit. So like if I were to enter here, right, I'm going to go ahead and put my stop loss at the low. So it's like a 15 pip risk, right? And remember that the 21 moving average is also key. So you see how this bullish engulfing breaks above. All right, so that tells us that the momentum is about to go in the direction of the trend. All right, like I said, enter here and target the previous high. All right, so this would be a 27 pip profit because you're going for that previous high. Okay, so step number one, identify trend. You're gonna wait for a clear indication of trend, and you can follow. You can use the 50 on the stochastic to kind of give you a heads up. Step number two, use the 21 moving average as also as an identification of trend. Strong break to the upside, market comes back down, retest this 21 moving average, right? We'll wait for that bullish engulfing. That bullish engulfing still falls above the 50, you know, on the stochastic. It breaks that 21 again. Stop loss at the low, take profit. You can either do a 1-to-1, so go for 15 pips, bag your 15 pips right there, or go to the previous high, and that's 26 pips. Okay. If you go 2-for-1, it also works out. So 32 pips, and you get your 32 pips back right there. Okay. All right. So for the next day, now let's look for a sell, legit sell. Everything's been trending to the upside. All right, so here's another example for a buy. So on this day, we get that cross of the stochastic to the upside, right? Price crosses the 21 moving average. It's a strong uptrend. It takes out the previous highs. All right. So the next day, what we're gonna wait for? We're gonna wait for a bullish engulfing. Here we have our bullish engulfing. So if we were to take this trade right here, stop loss at the low, 13 pips. 13 pips. You go for 13 pips, or if not, you target the high. If you target the high, it's 11 pips, right? If you go for the 13, your 13 goes there. If you go for the 2-for-1, 26 pips, there would be your take profit there. Okay. Okay. Once again, stochastic 50, it goes to the upside. Price takes out these previous highs. Price well, respecting the 21 moving average. Next day, wait for that engulfing. Wait for that engulfing. Right there. There's our engulfing. Stop. Stop loss is going to be below. There we go. And your take profit is going to be either the high, which in this case, it already took out the high. So you can go for your 2 for 1. All right, so 29 pips. So you go to like 58 pips. And you get bagged right there. You're 30 pips like 31 pips of drawdown. So if you just want to go for your 1-over-1, 31 pips right there. Winning trade and the direction of your trend. All right, guys. So for a sell, it's because EU has been trending. EU's been trending to the upside. Okay, so another buy. Price above the 50, right? It's above the 50. Another thing that we can do. All right, so it's 3 examples back to back. So right here, price crosses the 50 moving average, right? So we're looking for nothing for buys here, right? We're looking for nothing but buys. Let's say if we were to take this engulfing right here, what you want to see, guys, is you want to see an engulfing, your engulf, be the color of the trend. So my uptrend candles are blue. I want to see it engulf a red candle. Okay. So on this one, we wouldn't have a nice engulfing candle. But on this one, we have this engulfing candle right here. All right. Price is above the 50, right? And there's our engulfing. What we can do, take our trade. Take our trade down here. Or you can wait for price to cross the 21 moving average, target the high. Okay, 25 pip take profit. What would be your risk? 20 pips. If you want to go for 2 for 1, 40 pips bagged right there. The next day, same thing. Look, price is above the 50 and it's at a strong buy area. It's at a strong buy area. We have our engulfing. We'll put our stop loss at the low. Stop loss at the low. This would, price would have came back down, taking you out. We're going to be very, very, very transparent. You would have gotten taken out right here at this low, but boom. Later on, you got this engulfing, 32 pips. You got your 32 pips here. And you still made up for this loss. All right. So you're still an overall profit. Once again, here. Once again, here. Stop loss down here. Take profit at the high. 35 pips. 13 pip. 13 pip. Is it 13 pips? 13 pip risk. No, I apologize. 21 pip risk. You want to go for your, there you go. Same thing over and over, over and over. Above the 50, right? Above the 50, target the highs. Potentially got taken out here. Being transparent, that's a loss here. You know you're gonna make it back up. Boom, right here. 20 pip risk, 20 pip take profit, 40 pip take profit. Okay. above the 50. Let's go for an engulfing. Where do we have an engulfing? All right, so let's go for a sell. What has been going down? Okay, NZD USD price below the 50 right here on the stochastic, crosses down. What I'm gonna wait for the next day for an engulfing. Boom, I get my engulfing here. Easy. We know that we're going for a downtrend. Stop loss at the high. Measure it. 27 pips. Let's see if it gives us a 27 pips. There we go. 1 for 1 or take profit right here at the low. And it would end up being like a scalp. 17 pips. I wouldn't say no to 17 pips. Let's go. Okay. Right here. Price crosses below the 50. Next day, what I'm gonna wait for, an engulfing. Got my engulfing here. Got my engulfing. Stop loss above. Stop loss above. 17 pips risk. If you're going down for 17 pips, you would have been bagging. You would have got your 2. Okay, for the double. All right, guys, but let's see if we have another one. There's another one right here. 15 pip risk, target the low, 10 pips. You hit your 15 for your 1 for 1. Your 30. Let's see, do we hit our 30? Eventually we do 2 days later. But yeah, guys, this is for you guys to see how you can use these 2 simple indicators to help you trade with the trend. Now, what's the whole point of this setup? Like for those that are intermediate and advanced, we're just simply trading the structures. We're trading these right here. Okay, this is all simply what we're doing, but we're benefiting from these moves. A to B, C to D. This is where our engulfing would be, from C to D. A to B, C to D. This is where we're capitalizing off of those moves. Target the highs. Target the highs. Okay, just simple market structure, guys. Hopefully you guys liked it. Please go ahead and comment, your results if you guys use this. Let me know what you guys think, and let's grow, guys. Once again, welcome to my new YouTube channel. I still don't know what I should name it, but yeah, guys, much love, and